Guys, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, a brand new episode of Stock Market Analysis Show that we do daily. And today we had a market that took support, and then continued to consolidate on a daily time frame. Right. So this is analysis for March 29, Tuesday, 2022. So we would do the pre-market analysis for tomorrow, and it would be based on all the parameters that you see on the screen. Right. We would have some wrap-up and actionables as well. So look at the price pattern. So it is a hammer pattern, where the wick size is much larger than the body. Here also in the Bank Nifty also we have it. So this is the Nifty and the Bank Nifty charts that you're seeing. So you can see that it retested the previous swing low and then bounced up. This is remember that this is support zone for Nifty. It's a gap support, and Bank Nifty also did the same. It rebounded, took support at previous resistance zone at 35,000 and then rebounded. And it's a hammer pattern. Hammer pattern on the top of a rally. This is not at the top of the rally, but it could indicate a potential trend reversal. But we can look at the hammer in this scenario, since it is not on the top of the handle. It may be a trend reversal. It's a downtrend that is happening, a consolidation that's happening. So it may indicate that you can break out and go up. Probably, may not work always. But in the case of a big rally that is happening continuously on the top, and then here somewhere here you see a hammer, means that maybe indicating something. Or sometimes hammer along with other tri-star patterns, triangular patterns, and triangular candlestick patterns may indicate some bearishness or bullishness according to whether it is down or up. So otherwise hammer indicates that simply you can understand that there is bullish support on the downside, right? The market is not ready to fall. It has taken the support and then it bounced up, and it was very volatile because V-shaped moves only will make a hammer pattern, right? Fall down and then move up. That's what it is. Now let's give the details. So it was a flat day. Nifty closed half 0.4%. That's 23 points all that gained after the hammer recovery, and it's above the 50 as well as the 200 EMA, and it is still holding the gap support. But price overall is a trend line pattern, right? And this gives a clear picture on that, right? There's a double it's an M pattern if you look at the higher time frame, and then it's a trending channel where it is trying to break out from that, right? Bank Nifty is nearly 1%, a 0.85% gain, so 300 points of gain. So Bank Nifty bounced much more better, right, than the previous close. It was a green day overall, but not big moves, very small moves in Bank Nifty, just 20 points. But the point is that it had a good bounce back and recovery that happens. Even the Bank Nifty also, it's a trend line support, and the double top M pattern can be seen. Trend line channel downside sliding is what we see, but we have been seeing since many days. So intraday, if you see, this is the price action that happened. Once I will come back here. So here you can see that. Okay, this left side is Nifty and right side Bank Nifty. See, 200 EMA, it's still above that, right? It went to the 200 EMA, and this is also a gap support zone, and it bounced up from there. Here it is still above the 20 DMA, but this is the 200 DMA, and that's a resistance upside. It also has a gap resistance, that's also a resistance upside, but it bounced back up, from the 20 DMA. Here it bounced up from the 200 DMA. So moving averages are beautifully working out, right? Several times you can see that on a simple moving average, the market is taking such beautiful bounce ups. This is 20 DMA and 200 DMA. So that's another intraday price action. This was a V shape, right? It dropped, gap down, and then boom, it gapped up and then fell close further up. Bank Nifty was the same, double V, the small V and a big V. So this is how the volatility is working in the market in case of uncertainty, right? Bollinger Bands, you can see a slight expansion on the top. What's happening in the Bank Nifty also, slight expansion, which could indicate about 20 moving average. Both together could indicate there is some bias towards the bullish side, but overall it is a volatile because of width, and also it is more or less a sideways movement with volatile action with a bullish bias, is what Bollinger Bands is saying. Support resistance comfortably 7th day, it is doing nothing and sitting on the same gap support. So the immediate resistance will be 7200 to 17300, where it is currently nearby that, and then above that 7350 to 7400, then above that 17500 to 17600 Fibonacci 23 retracement. Downside, the supports will be 17,000 is a great support, and then up below that 16800 to 16900, that's Fibonacci 38 retracement. Below that 16200 to 16350, and below that 16550, 16550, and below that there is a gap support also. and previous support also. So 16 350, 16 450, Fibonacci 50 retracement level also. That's Nifty. And the Bank Nifty right side, you can see that it has taken a support from 35,000 today. It's Fibonacci 50 retracement level, and below that you have 34 350, 34 750, and then 30. There is a 33,600 and 34,000 range, which is a Fibonacci 61 retracement line, which is also having a gap support also on the top of that. On the upside, resistance immediate will be 35,600 to 36,000 nearby level, then 36,300 to 36,800 Fibonacci 38 retracement levels, and then you have the 37,000 area, and then 37,500 area, and there is a major resistance. So this resistance is a concern, and the 20 moving average also is coming near to that. So this too is what Bank Nifty is to be worried about. But this support seems to be working beautifully on the 70s. As long as this is not broken, we are in good shape. But climbing above this and then closing above 7,500 is crucial. Similarly, climbing above 37,500 is also crucial for the Bank Nifty. Momentum is continuing the sideways movement. Some rising pattern, rising up momentum we can see today, but it is resisting below the 60 RSI. Same thing in the Bank Nifty also rising up, but the sideways, and yet much below the 60 moving. So sideways momentum overall. Bank Nifty also the medium term also, both the indices are on sideways momentum. Trend indicators, if you see, Nifty maintains the bullish DMI positive, the ADX indicator for the trend, and Bank Nifty is already crossed over to bearish zones, and medium term both are bearish. So trend has not that great on short and medium term, but Bank Nifty managed to hold the bullish zones. Trend is yet to turn fully into the positive, right? But momentum is sideways with some bullish bias, you can say. India VIX has cooled up a little more. That is a good thing. That is 3.5%. That's 22.61 is the level now. Right? Implied volatility of the Nifty is 22.7, and IBP also has cooled up from the 96, 98 levels to 87.5. So there is a big cool up that is happening. So which could give an indication that it may come down below the 27 very soon, and then markets may rally upside. Never know. So VIX cooling off is a good thing. Momentum is sideways, and then it's rising up. Trend Nifty maintaining the bullishness on the short term, but Bank Nifty and medium term of both indices are yet to catch up. So open interest analysis, if you see, there is some unwinding of the resistances. Call writing is happening here. There is unwinding, you can see here. Some new bull portions on the put side also has happened. So this is analysis for the monthly expiry of March 31st, 2 days from now. So 16,500 and 18,000 is the 1,500 range that the put writers and call writers are the highest, and they could act as a support in the resistance levels for the expire. 16,000 and 17,500 is the next highest put writing and call writing, and Bank Nifty 34,000 and 38,000. That's a 4,000 points. So people are expecting that Bank Nifty can be very wild for this monthly expiry. That's what you can see, the highest put and call rating. Second level of highest put and call rating is 35,000 and 36,000, and the put call ratio is closer but not bullish enough. 0.81 put call ratio PCR, right? Long build is what you see today. Futures open interest are saying that. Now sectorial approach, Reliance did good, ICICI Bank did good, Kodak did good, so heavyweights did good, ITC also did good, HDFC also slightly green, IT also did well, except in fee. TCS did somewhat well. So that's what all the sectors, the main sector which is really bullish was metals only, and auto also performed okay, but banking did not do that great overall. If you see, IT also did not help, right? Major sectors, banking, IT, and FMCG overall did not help, but individual stock performances for clients and ICICI and Kodak Bank, HUL and ITC, they seems to have helped the market to move up. Now index heavyweights, HDFC Bank, green close, but still resisting below the RSI 60. HDFC also resisting below the major resistance zone, sideways momentum for both. Reliance is the performer. It has beautifully made 22% in just 1 month time, and then just clearly breaking out of a weekly cup and handle pattern, you can say. IT is very close green, sideways, slips slightly in sideways. The Infeus slips, it's in the bullish zones, but it is very close to the ATH, so I have to be cautious. TCS, but Infeus did not perform well, today. TCS, we have seen that earlier. This is also resisting below the bullish zones. It's rising up and bouncing well within the channel, but slow and steady. Remember, it has got a lot of resistance to cover before it goes up. But as of now, sideways movement for it. ICC Bank performed okay, good today. It took the RSI support of 40 and then bounced up. And remember that it is facing a major resistance above immediate sideways momentum as of so, but a bounce up from the 40 is positive. Similarly, Kodak also seems to be trying to bounce up. It is taking a support of the major support zone where it has been playing around long time. Resistance has taken a support of RSI 40 and then taken a bounce, and overall, no, it intends to either consolidate here or slightly more. That's all. So ICSC is showing some bounce up action today, but no, all sideways. The only stock is Reliance as of now among the index heavyweights that can be confidently taken as a bullish movement that is happening. So total performance, if you see IT flat, no, it was a flat day. IT flat, right? Pharma flat, FMCG flat, reality flat. All are sideways momentum. IT also slipped into the sideways. Metal is only sector which is bullish. It moved up nearly 1%. Auto also moved up 0.5%, 0.65% up. And rest are all sideways and flat performance of the day. So, metal is only stock that can be taken as a long because the medium term also is bullish. Institutional participation data has not come in yet, but as we have seen that the Fyers continue to sell. DAs continue to buy. That's the same story that is happening. Let's quickly check if the data has come in for today's. If no, it has not come in. It's more. But definitely there must have been a good amount of fair selling that happened. That's for sure. Now USD now we can see it's sideways movement and it is consolidating, and it's very close to the all-time high of 76 above levels, and some intervention may be happening from the central bank, but don't know whether how long that could be possible because dollar is shooting up to reach the night. Dollar index is shooting up to hit the 99.6 levels, and momentum is seems like it will take it to that level very soon. So rupee maybe weakening in the coming days, but today was a little cool off. Right, little strengthening day for the rupee, you can say probably. Right? But overall, rupee at all-time high levels and tend to be weakening further. Dow Jones, the US markets is what you see here. Dow Jones is resisting near the bullish zones, but green day was the last trading, and it was a good recovery, bounce up and reclaiming the major support zone, and then it is tending to move up. That's the same story that the other indices of Nasdaq and the S&P 500 also showing green candles all over there, and they're almost climbing into the bullish zones, you can say. But Dow Jones is resisting still. Some more move happen. So the coming days we just need to watch whether this momentum is maintained and the momentum managed to get in the bullish zones or not. Right? If that happens, that will be very positive for our markets also. Crude oil cooled off slightly today, and that may be the reason why the market is bouncing up 106.3 from 110 kind of levels. Momentum is in the sideways, slipped into the sideways, you can say. So that's something positive, and we can only hope that it cools off below the 100 levels very soon. Because that would indirectly impact the markets and everything, economy, everything, right? Gold was attempting to move up from the major support zone where it had settled after a false breakout, and then that did not happen, and it is feeling the selling pressure, and then you have a red candle today pulling it back to the support zones, momentum is sideways. Two actionables, India Hotels, it's a Tata Group company as far as I know. So its weekly chart is what you see. It can give positionals. Look at the volumes. Look at the momentum that is rising in the bullish zones. Look at the trend change. Look at the candle pattern. The only thing you have to be cautious that you would enter only on a signal when you get above the all-time high above, right? 237.6. If that is breached, that is the time you would enter. Until then, you will not enter and have tight stop losses. Right, the assumption is that this rounding pattern could give a very good breakout if it works out, right? So swing and positional trends, so it's a good company for investment also. Trend is the next one. It's also a Tata Group company that is having the same double rounding pattern. It is already broken out and it is well within a channel. It is near to the channel top, but it can give swing and positional got both. Well, it's a good momentum is good, trend is good, right? So trend and India Hotels, both Tata stocks, the group stocks. So just to wrap up, it's a neutral to mild bullish view, looking at the chart patterns, support resistance levels, momentum indicators, trend indicators, Bollinger Bands, all of these that we have studied. I am concluding that the market could be mild bullish or neutral. That's my view on the market, right? So reasoning is that 11% of recovery has happened just in 13 days, and good support levels are there. Market is not ready to give up. Even if it falls, it's taking the support on the moving average beautifully. But the thing is, on the upside, Bank Nifty has got huge resistance and hurdles of a big gap, and a 200 DMA also has to be conquered. So as long as 17,500 and 37,500 is not conquered, we have worry. Fyers continue to sell is a worry. Crude and rising crude price and weakening rupee is also a concern. So 17,500, 37,500 is what we have to look for Nifty and the Bank Nifty, and we have to make sure that Nifty can both the indices closes above the 200 DMA. Until then, we'll have the volatile sideways movement as the Bollinger Bands are indicating. So a lot of uncertainty still continue to be there. Market is still 22 above is also high. It has to cool off below 20 and from that range. Until then the war is still happening, so uncertainty is still there. We have to be cautious. If continue to sell because of inflation, Fed tapering, and all of this is all that worry concern. Everything is still there in market, but the strength of the retail investors is what you see. What holds the market not to crash. Right? Even if it falls, it immediately bounces back. Right? Every dip is getting bought for us many months. Right? And we had a decent correction also. Positive factor is that this kind of recovery is a positive, but that positive things can be taken out just in one or 2 days if there is a bad news that comes in, given the uncertainty of the global fear, crisis of the war that is there floating around. So stay away from the market as long as it is it is forming a consistent range below the 20. There is some clarity and uncertainty is mode of pleasant that will happen. That is the time you have to make do the training bets on the options especially, right? And until then, only short swings or intraday is all that can be tried. And if you're carrying forward, make sure that you have risk defined strategies, and hedge positions. Otherwise, it will wipe out. Intraday, look at the difficulty you had. Big V-shaped moves that happened today. So you just can't have a directional trade that unless and until you study the study to read the charts in the very lower time frame. So this is also a time for picking up quality stocks in SIP mode before during the every dip, because markets have corrected and the correction is still not over. We get good quality stocks still at cheap prices, some of them, right? So that's my view, and mild bullish, to neutral kind of short-term view for tomorrow is what I have. So if that helps you to frame your view for the next day, and consider hitting the like button and share to your friends and colleagues. And we have very few subscriptions, and your help in this regard will be much appreciable. Thanks a lot. Happy trading, happy investment, happy learning. Bye.